Liquidity grabs. These occur when price breaks through a liquidity level and rapidly shoots back up, forming a long candle wick. This concept is widely used by price action traders. Liquidity grabs can be used to spot potential market reversals and the market trend. Before we can use them though, we need to know how to find them. And before we can find liquidity grabs, we need to mark out our liquidity levels, which we will be watching. To do this, go to a higher time frame like the 30-minute, 1 hour, or 4 hour chart and mark out pivot points. These will be recent lows and highs. You can now go back to a lower time frame that you want to trade on, like the 5-minute chart. Now, to find a bullish liquidity grab, wait for price to come down to your liquidity level, sweep it, and shoot back up. What this will translate to is a candle with a large bottom wick, which indicates that there's heavy buying pressure in the market. And to find a bearish liquidity grab, wait for price to come back up to our liquidity level, sweep it, and shoot back down. This will translate to a candle with a large top wick, which indicates that there's a lot of selling pressure in the market. So now that we're able to spot these liquidity grabs, we need to know how to use them to make some money. For basic use of a liquidity grab, we're gonna follow these simple rules. If we have a bullish liquidity grab, we'll only look for long entries in the market. And if we have a bearish liquidity grab, we will only look for short entries in the market. I'll show an example of a simple strategy using the bullish or bearish liquidity grab so you can go practice and make some money. So right here, we have a bullish liquidity grab, meaning the market is going into an uptrend and we are only looking for long trades. There was a fair value gap that formed, and when price retested it, you could have taken a high confidence long entry, setting your stop loss below the fair value gap, targeting the previous highs. And then here we had a bearish liquidity grab and saw that a bearish fair value gap has formed. So we take a short position from this fair value gap, setting our stop loss above the fair value gap and targeting previous lows. This is just one of many strategies that you can implement with liquidity grabs. If you're interested in using the indicator I was just using that plots these liquidity grabs, search for the liquidity grabs indicator by Flux Charts on TradingView. It's completely free to use. If you enjoyed the video, please like, comment, and subscribe.